All right, people, T from Focus Trades. Monday morning, guys, back to kick some ass. Before we jump into the video, guys, make sure you give me a follow on Twitter at Focus Trades T. Check me out on Instagram at Focus Trades as well. And you can check us out at focustrades.com. Just opened up enrollment, guys, for one-on-one lessons. First time this year, we're jumping back into the one-on-one lessons. Now, guys, the word of the week is going to be earnings. All right, you got to be careful this week. You got to kind of respect the fact that we're in earnings season once again. All right, so on top of all the other crazy shit taking place, we're in the middle of earnings season. And this week, guys, is a big week. All right, you got a few heavyweights here. Or actually, we got a lot of heavyweights. You have got Google, AMD, Boeing, Tesla, Microsoft, Facebook, Qualcomm, Apple, Amazon, all announcing earnings this week, guys. Right, this is basically our market. All right, you got all the big FANG stocks up here, pretty much. Facebook, Amazon, Apple, Google. Then you've got Tesla. Then you got Boeing. Then with the semiconductors, you got AMD. So, guys, it's set to be a pretty, big week as far as earnings go. And of course, right, they're likely not going to be good earnings. How could they be good earnings? Last quarter, taking into consideration everything that's taken place, in the economy. But the reason we want to talk about this, guys, is that we want to pay attention this week, right? It isn't so much how good or bad the earnings are, it's the reaction from the big money, right? It's going to be the reaction, guys, from the big money that's going to set the tone from this week. If there's a very negative reaction to the earnings from Tesla, Amazon, Google, you name it, that could impact the market in a negative way. If there's a positive reaction from the earnings, obviously that could impact the market positively. So as you're placing risk this week and as you're looking for opportunities, guys, do keep in mind we're in the heart of earnings season and no bigger week than this week. All right, guys, let's jump in here. So to the upside this week for ES, my key levels are 28.85, 29.20, and then 3,000, guys. We got 28.85 being this level of resistance right here that's kind of kept the market pinned in this tight consolidation. That 29.20 comes from the level over here where the market got absolutely dumped. And then, guys, the 200 period simple moving average is all the way up here towards 3,000. So these are my key levels heading into today's session. And as always, guys, if and how the market can trade above those levels is going to set the tone for this week and for the kinds of trades that I'm looking for. So in the event, right, that we can't even break 28.85, I think we could see the market begin to roll over. You got point of control right down here, right near that 15 period simple moving average. And mind you, guys, right, you take a step back, you look at the market, but a lot of back and forth chop for the past couple of weeks here. So we're going to need a strong move above 28.85 to get us out of this chop. Otherwise, we're still stuck in the same range. So keep that in mind, right? A market in a tight range, while it's setting us up for future moves, it's tough on the weekly expiration options. So 28.85, guys, that's one key level of resistance. So for those of you guys looking for strength this week, you want to see the market easily clearing that level. If we don't, it could be choppy and we could roll over. So I'll push this back, give you guys a better look what I'm looking at right here. But pretty simple, right? We're stuck right now. We got to get above this level right here. If we can potentially, guys, begin to make a move, right? Market makes another leg higher, making a move towards that 200 SMA all the way up at 3,000. On our way, we got this level at 29.20 where they absolutely dumped the market going back at the beginning of March. I'd like to see if we can get through that level as well. So there's my big picture levels, guys, for the market. We can take a look here at the hourly chart. And, we're up just about 1% or so here this morning, making a move, guys, towards that previous resistance level. Now, remember, as good as this move here looks, we got to get above and we got to clear over 28.85. So don't get too amped up this morning. You see the market up 1%, right? You see all this momentum here. Sure, it looks good, but it ain't shit, guys, until we can break out of this range. Otherwise, we can easily roll over, and this was a bunch of nothing. So that's where we sit this morning. We're coming up on a couple messy levels right now. And again, guys, we got point of control, something Chandler, my brother, really teaches in the group, all the way down here around 27.85-ish. So we'll see what happens here at the open. But I am of the thought process, guys, that I do want to be a little bit careful, taking too much long exposure as long as we're hanging underneath that 28.85. If we can clear it, it's a different story. If we can't, a little bit, susceptible here to rolling over. So with those key levels in the market, guys, taken into consideration, here's two setups I'm focusing on today in NFLX as well as Shop. So originally, guys, I did want to come into today looking to take a break on shop above Friday's high right around 652. Unfortunately, it looks like she's gapping up a bit here with the overall market. So we're going to have to give this thing a few hours. It's only 7 o'clock in the morning right now. Going to have to wait until the open to see where this thing sits. But, Shopify on its own here, guys, as far as the setup goes. Crazy strength as of late. You're kind of going into this bull flag now where you've had a big time run. You got all that momentum cooking. You're going in this cool down. Can this thing make a push towards and break through all-time highs this week up there at that 666? So that's one move, guys, we're looking for this week. Is that move to a new all-time high for shop? As I mentioned originally, would have preferred to play this original breakout. Now we're gapping up a bit. I'm going to see how things are at the open. When it comes to shop here, guys, right, because of its crazy strength as of late, the calls are really expensive. Right? So if we look at even this Friday's expirations, right, they're going to cost you a couple $1,000 a pop. And you can go, as far out the money as you want. They're still going to be pricey. For a lot of you new traders, probably out of your price range. What you could do, guys, is an alternative. And again, we got to see where this thing opens up this morning. But instead of having to jump into those long calls naked, you could put on a less expensive put credit spread. Where instead of buying calls, guys, you're going to sell the out the money puts in the form of a vertical. So here's how that would look, for example, right? Say we wanted to sell these 620 puts, right? So we're going to short these contracts. We're going to buy the 615s as protection, and this gives us our credit spread. I'll show you guys an example of one contract per side here, right? So your max loss, guys, is 260, max profit is 240, right? That's a beautiful risk reward. As far as option selling, it doesn't get much better than that. And what you're doing here, guys, is you're basically looking to collect the premium as these puts lose value. Should shop make a move towards the upside, those 620 puts are going to begin to lose value. You collect all the premium from the 620 that you shorted as profit. You take that minus what you're going to lose from the put that you bought as protection. That's going to be your overall profit. So if you're curious more, guys, about credit spreads, I got a ton of videos here on the channel. But that's one thing I'll be looking for, right? Not so much as a way to get into a cheaper position, but I'm a fan of selling options, guys, especially on a name like Shop here, where if you can get a good credit spread and then this move takes place, you're collecting premiums really quickly. So I'm a big fan here of Shop heading into today. Hopefully this thing doesn't start ripping into the open and kind of spoil the party. And, as always, guys, it's really going to depend on the direction of the market here. If the market can rip today, guess who's going with it? Most likely is going to be Shop. And now my last setup here, guys, I like today is Netflix. So, right, my best trade of the week last week was actually an earnings trade on Netflix, right, where I shorted premiums on both sides into the announcement and collected max profit the next morning, or not max profit, but collected a good, 100% return on risk after this thing, guys, made basically the lamest reaction to earnings that we've seen in a while. Right? Opens up the following day basically flat. So much like Shop, guys, you get this big, strong move into earnings. Now we're banging back and forth and kind of consolidating. This is probably my number one pick for a stock that potentially continue its move to the upside if the market can support it. So you guys aren't going to catch me wanting to go long Netflix if the market starts to take a nosedive. But in the event that the market does continue forward, and especially, guys, if we do make that move up towards the 200 SMA, which we talked about earlier, I like Netflix a lot here. So here's my thought process today, guys. I'll be looking for an entry in Netflix. Not so much for a day trade, most likely, but more so a short-term swing. Only rule being that we have to hold above last week's low, right, of 413. If we can hold above last week's low, and we'll see how things go here this morning, I'll be looking to take a position in Netflix, looking for a move back up towards that 450, and then potentially even further towards the upside. So it's kind of this classic pattern here, guys, right? You make a big, strong move. You tighten up and consolidate. You make a big, strong move. You tighten up and consolidate. And Netflix is one of these names that after that period of relaxation, so to say, it can continue trucking. That's what we're looking for here, guys. So we take a look at the pre-market. And not too active, right? You got POC right here, but not too crazy. So a few different ways you could go about this, guys. Now, let's say you're looking for a trade for this week. Right, you're confident that Netflix can move forward this week. You're looking for that move up towards 450. You got three ways of going about it. Right, the most high probability way would be to short puts, guys, underneath last week's low of 413. So we go look at the premiums, as they closed up on Friday, and we're looking to go long Netflix above 413. But, you're not trying to sit there and babysit the position. You want the higher probability trade. So maybe you come sell puts down here at 400. You can buy yourself, guys, some 395s. And let's see how that risk reward looks for one contract. All right, and guys, risk reward is going to be different, subjectively. To me, that's not bad at all. Right, small position, I do more contracts. Maybe you go sell some 410s instead. Right, let's go see how that 410 support looks. Or 410 spread, rather, right? Do one contract per side. And that's pretty sweet, guys, right? Risk 400 to make 100, 25% return on risk. And then you're shorting options down here at 410 right underneath support. So that's one way of going about it. You also could, guys, while it's kind of quiet and tightening up right now above support, look to buying in the money call. Now these are going to be a bit pricier, right? 1,000 to 13 to 2,000 bucks. But if Netflix does make that move towards 450, you're getting a pricier option here. That's going to make a good move, guys. Right? For example, these 435s, if you got them at 10 bucks and they start moving a few notches in the money, you're going to make a killer return. That's one way of going about it, right? The benefits of that, guys, is you don't really got to deal with that ugliness of the weekly premium decay, which leads you to the next option, which would be to go with one of the cheaper out-the-money options. Now, my goal, guys, if I'm going to buy an out-the-money option, during the course of this trade, I want to see that thing go in the money. So in the example of Netflix here, if I'm looking for a move up towards 450, if I think that move can happen, I'd probably think about guys buying a 440 or a 445. Right? They're cheap enough. If that stock, in this case Netflix, can make that move up towards 450, guys, these things, right, and especially if the move happens quick, they're going to go from $3-4 bucks, right, to being in the money a contract or two, right, 10-12 bucks or so. That's a killer return if it can make a move towards 450. All right, so buying at 440, guys, it's cheap enough. But if the move you're looking for does take place, it's going to end up in the money. So you got kind of three different ways to go about Netflix, guys. The high probability route is to kind of sell some out the money puts with a put credit spread. You can look to buying in the money option, right? It's a bit pricier, but then you don't really got to deal with the craziness of the premium decay that you're going to experience on these weekly options. Or, guys, with a cheaper, potentially, bigger return, option here, you can go with an out the money at, say, 440, 445. And that trade's only going to work if Netflix makes a move to and above 450. If you go buying a 440, guys, and this thing kind of sits around and collects dust, you're going to get hit with that premium decay. But ultimately, Netflix, Shop, all these others, guys, it's going to depend on the direction of the market this week. And potentially, the direction of the market this week, guys, could be influenced by the reaction to earnings. So I wish you guys the best of luck. Keep these things in mind this week and go kick some ass. I'll talk to y'all tomorrow morning.